Hi everyone, my name is Joe Janis. I'm the creator of My Loan Mod Calculator, and I just wanted to create this brief tutorial on how to actually use the calculator. Okay, it's very simple. Just want to make sure that you are putting in the numbers correctly so that way you get the most accurate result possible. All right, so what we see here first is that you have numbers for two borrowers. Okay, if there's only one borrower on the mortgage, then you want to only include information for that borrower. If there is a second borrower on the mortgage, then you want to include that information as well. Okay, so the first information that we're going to be putting in is we're going to be telling the system how often you actually get paid. Okay, you can get paid on an annual salary basis. You can get paid 2 times a month. Okay, you may get paid every 2 weeks, you may get paid weekly, or you may get paid tax-free income. Okay. The important thing to note is that the number that you are going to put here in the salary amount should correspond to the number that you get paid for each one of these different pay periods. Okay, so if you actually get paid an annual salary but then collect your paychecks either one time a month or on the 15th and the 30th, or you get paid every 2 weeks, depending on what that is, but if you get paid an actual annual salary, what you want to do is make sure that the salary amount that you put on the next line corresponds to this amount. If you get paid 2 times a month on the 15th and the 30th, you want to put in the number that corresponds to the paycheck that you get. Okay, so if you get paid on the 15th, just put down the information that you would get on the paycheck. Okay, if it turns into you get paid an annual salary but get paid 2 times a month, again, just select the annual salary. And the reason why we're doing this is because what we have to do is we have to convert these numbers, okay, the numbers that you're supplying, and convert it into a actual monthly salary. Okay, so if any one of these numbers differs on a weekly basis, so if you get paid weekly, let's say you might be working as in a restaurant as a waiter or waitress or bartender. If you get paid weekly, then what you want to do is you want to select weekly and enter in the amount that you would get paid on average for a weekly basis. Okay, and then do the same thing for the second borrower. Okay, next is the real estate taxes, real estate insurance, homeowner dues, and homeowner association maintenance fees. Now, the reason why you want to include these is because they actually reduce the amount of money that you can actually afford to pay the bank. Remember, your target payment is 31% of your gross income. Now that 31% payment includes principal, it includes your interest payment, it includes your real estate taxes, it includes your insurance, and any homeowner association dues and homeowner association maintenance fees. So if you don't include this, you're going to actually get an incorrect reading. All right. What it will actually do is it will actually raise the interest rate that you have to pay. Okay. So what you really want to do is then include your real estate taxes on an annual basis. All right. So let's say that you have $4,500 you pay on an annual basis. Your real estate insurance, let's say you pay your premium either annually, semi-annually, quarterly, or monthly. What you want to do is select how often you pay it, and then put in the actual number that you pay corresponding to the period that you selected. So if you pay, let's say, a $1,200 annual premium, you put $1,200. If you pay it semi-annually, that same $1,200 payment is broken down to 2 payments of $600. If you pay quarterly, you want to put in, $300. And if you pay it on a monthly basis, that same $1,200 dollars will be spread over 12 equal monthly payments of $100 each. Okay. Next, enter in any homeowner association dues or maintenance fees. Okay. And for the outstanding loan balance, what you want to do is include your missed or outstanding principal amount, any missed interest payments, any escrow payments that you may have missed. So if you're 3 months behind, and you are usually include escrow payments for insurance and taxes, then you want to include that as well. Okay, and you also want to include any maybe back fees or legal fees that may be due. So you can either get this information from your most recent mortgage statement, But if the mortgage statement is more than 2 months old, what you may want to do is actually contact your servicer and ask them for what they have as a payout amount, okay, or the amount due. All right, so let's say here you may have $234,899, okay, dollars. For all these numbers, you want to exclude dollar signs and commas. Okay, you don't need any cents, so round everything up to the nearest dollar, and then just click the next button, and that's basically it. Thank you.